Oil extends gains for the second straight day on hopes that OPEC Plus will agree on deeper output cuts this week. Today, market participants will keep an eye on the G7 teleconference. Investors anticipate that global central banks, including the Federal Reserve, will implement financial stimulus to support the economy. This growing optimism weighs on the US dollar, thus giving the Russian currency an opportunity to rebound. Commodity markets display mixed trade on Tuesday. Early in the day, oil was trading steadily higher, but in the mid-session, the price slipped to the red. Brent crude was trading with minor losses and settled at $52.73 per barrel. WTI is following the same trajectory. The American crude was last seen trading at $47.76 a barrel. The overall market sentiment remains bullish, however. This means that the pullback was a short-term scenario and oil prices may rebound soon. The OPEC and allies are expected to agree on additional output cuts by 750,000 barrels a day. On the other hand, Saudi Arabia suggests a bigger output cut by 1 million barrels a day. If this proposal is accepted by the OPEC members, this will boost oil prices in the short term. The Russian currency failed to gain momentum on Monday. By the end of the session, the US dollar managed to win back early losses, so the dollar-ruble pair hit the level of 67 once again. The ruble was losing ground amid the lack of supporting internal factors and weak dynamics of the emerging market currencies. Today, the ruble has slightly advanced against the US dollar, with the dollar-ruble pair settling near the mark of 66.4. The Russian currency seems to trade uncertain amid rising oil prices on the one side and downtrend of emerging market currencies on the other. Besides, the ruble is likely to benefit from a number of internal factors. Thus, the decline in foreign currency interventions in March may support the ruble after the slump of oil prices in February. However, the tax payment period is over in Russia, which means that foreign companies' activity will considerably decrease. This factor is likely to put more pressure on the ruble. This week, the dollar-ruble pair may again attempt to hold at the level of 67. Given the current oil prices, macroeconomic data, and seasonal factors, the levels of 63.5, 64.5 seem to be the most reasonable ones for the pair. That's all for now. Thank you for watching and stay tuned.